What's going on, guys? How are you? How are you doing? This is Shocks and this is ShocksCapital YouTube channel. Today we want to talk about the right way to trade volatility indices using smart money concepts. So what I'm going to do first is to explain what smart money concept is, just give a little bit of a summary. Then I'll show you on the charts what you need to do to trade smart money concept effectively on volatility indices. I'm going to give you a small sketch right here so that you understand what you are talking about before we talk about the charts. So when the chart is moving, we have what we call market structure, right? It moves like this. So this is the basic structure of the market and volatilities. There is no asset in the world that prints out a move or a structure like this than volatilities. So what you have to understand here is whenever price takes out this high, we are going to be waiting for some point of interest where price can just come back and retest in these areas that you are seeing here. So what you need to see first is a break of a high, then you wait for some kind of a retest in this area. So what we need to do, or what we need to understand, is when price is moving down like this, it will be forming what you call lower lows as price is going down. So what we need is to wait for price to retrace back while building up liquidity and retest a point of interest and go down. And the right time frame to do this on volatility indices is the H1. So we're going to go to the H1, explain what you need to do and what you need to look out for. Then after that, we are going to go back. We are going to be looking at the M15 time frame and how we can then refine those order blocks or points of interest that you're going to get on the higher time frame and actually enter your trade. So after that, you would be well equipped to trade smart money concept on volatility indices. So let's just go right into it and explain what we are talking about. And if you know, smart money concept comes from ICT, Inner Circle Trader, taught by the Inner Circle Trader on YouTube, right? So we're going to be looking at that and kind of simplifying all you need to know. So if you have a chart like this is the V75 chart. I think it's the most popular volatility index in the volatility index world, right, on deriv.com. And if you don't have an account to trade these ones, there are links in the description down below. You should be able to get those ones and be able to trade with me as we go. So this is what we are doing. So let's just look at this. If you are looking at this particular one, you can clearly see, number one, what you see is we have a break-off structure here, which is a change of character that you see here. So this is basically coming from that price was going down. Then this was the last high that price printed. So this high was taken out by price, which means we have changed directions. We are now in an uptrend, as you can see. So in an uptrend, there are certain characteristics of price that we look for. And the first one is the breaking of highs as we go up. And we look at this high that was taken out, this high that was taken out again. And we are waiting for price to actually check out this high if it does retest this particular zone. So what you need to understand is after every high, we mark out an order block. By now, I'm expecting that you know what an order block is and you know what inefficiency is. So an order block that you're going to mark should have a little bit of inefficiency in this one, just above it or below it, for you to consider it. So there are two things that you can do. You can mark an order block as your point of interest, or you can mark your a fair value gap as your point of interest, as is seen in this example, where we have this fair value gap that was responsible for break of this particular high that you can see there. So break of structure right here, and retest of fair value gap and the order block. So price retested this fair value gap, right, and went up. And if you are looking at it again, you can clearly see that we have a fair value gap again in this area where price retested the fair value gap after rejecting to retest any of these areas right here. And this is what you are doing. And in this area where price is currently at, we have a fair value gap again in this area, and you can take it up, as you can see. So this is V75, and it's very good for for fair value gaps. And if you go to V75-1S, you will clearly see that this one now respects order blocks. And if you have a break of structure like this in this area, what are you doing? You are looking forward for your order blocks, and the order block that you can see is what is this order block right here. And where is the inefficiency? Remember, you mark the order block with the inefficiency. Inefficiency is what is in this area. So this is the area that you are looking for to take this down. And if you look closely to your left again, you see that we have this order block that is there. So price went into the order block and took out some inefficiency there. So if you were only considering this order block right here, you clearly see that it would have taken you out because of this inefficiency that you see in that area. So with that being said, let's look at the next order block that you can see in this area, where you are looking at price breaking this low here, breaking this low, and we can maybe consider this order block after this low was taken out. This is the low that we are looking for. And remember, if it's like this, you are looking at price taking out these equal lows, because this is liquidity, right? So these equal lows are liquidity, and you have your order block in this area. You want price to strike through that and go down like that, right? Remember that when price makes a very aggressive move like in this area, right, what you need to look out for is the inefficiency and the order block. And most of the times price might not come and retest this order block that you see, or the supply zone in this area. So your best bet might be the inefficiency that is closer to the flip zone, which is this one. You see this inefficiency, you can guide that using this particular inefficiency. When you go to the lower time frame, you clearly see that you find a better looking entry using that. So we have a break of structure here, and what do we have? We have an order block in this area, and price retested that and go down, right? So the trick here, or the secret, is to find order blocks and inefficiencies that a grade 1 PPU can actually spot, right? If your little sister cannot spot that particular order block, then you are trying to complicate things. Don't complicate things. Look for the order blocks that anyone can find, right? We have a break of structure here, and this is a very easy order block with inefficiency there, right? So you are trading from the order block here. And what are you waiting for here? Remember, we are saying we have a break of structure here, and what are we waiting for? We're waiting for price to come to this particular order block there and go up and take out these equal lows that price has made in this particular order block. If price then breaks this particular OB that you see here, we'll be looking for some inefficiency in this area where we are going to be having that break, and we'll be looking at that inefficiency to take it down, to go down. So let me look at another one, which is V51S. And remember, we're looking at the H1. And if you are someone who wants to trade quickly and who wants to scalp using the smart money concepts, the concepts are the same. It doesn't change, right? So what you need to do is to understand again market structure and how price is moving. Then from there, you can then be taking your trades as price goes, right? So if you are looking at this particular chart, you can clearly see that we have equal highs at this particular zone. Then we have equal lows at this particular zone. What are you waiting for? You're waiting for price to break any of these. Then look out for your order blocks or your inefficiency. So price breaks to the downside, and this is your order block. Remember, you are scalping, so you don't want to be in a trade for more than an hour or so. You just want to get in and get out. So this is what I'm showing you on this particular one. So this is how you are going to be doing it on the lower time frames. And if you can clearly see, that we break a high there, and we have some order blocks in this area, and price goes. You want at least 2 candles, then you are warm and dry, because that's what you want. And remember, we are scalping, so you don't need to be staying there for a very long time, right? Let's look at this. This is the step index, and we have a break here. And after that break, what do we have? We have this particular zone there, and after that, what do we have again? We have a break there, and we have this particular zone that price can retest with the inefficiency. So this is how you are doing. And if you're looking for this, you can clearly see that we have a break of structure at that particular zone. What do we have next? A break of structure, a break of structure. After marking that, you can just go down and be marking your order blocks as price is going, and be marking your inefficiencies and your order blocks as price is going down. So this is an inefficiency in that area. This is a fair value gap. As you can see, price retests that and continues going down like that. And this is what you will be looking for if you are someone who wants to be trading these things like I do. So we have an order block, then we have an inefficiency. Remember, a fair value gap is a point of interest that you can trade from. We have an inefficiency there, that is a fair value gap, and price is going. So the basic principle that we are talking about is when we have a break, we should be having either a fair value gap or an order block. You can trade from any of these as price is retracing back to retest any of these 2 points of interest that we are talking about. All right, and when price breaks another high, we just repeat the process until we get what we want to get. And remember, if you don't have an account to trade these indices with me, be sure to register with the links in the description down below. Join our Telegram channel for free signals, and you can be able to be trading with me. And if you want signals from me, I do offer those ones, and mentorship if you want, again, I can offer you that. So I will see you in the next video. Shocks out. I hope this was helpful.